Hello and welcome to sunny London. My name is Ross Haydock. I'm a technical consultant with Mercia Group, and this is one of our partners, Jose Hopkins, from Simplify Climate. Hello, Jose.
Good afternoon, Ross. Hello, everyone. Very excited to be here. I'm just to introduce myself briefly, I'm a chartered accountant from the ICAW, ACA, and I'm the founder and CEO of Simplify Climate. And thank you, Ross, for having me today. And I'm excited to cover the discussion on ESG and accountancy related.
No, it's good to have you here. We're here to give everybody an informal insight into ESG. That's environment, social, and governance. Or if you prefer, we just call it sustainability. It's an area that's becoming more and more important to everybody in the world, businesses, and just to us accountants as well. So that's what we'd like to talk to you a little bit about that. Over the next few years, sustainability disclosures are going to become extremely relevant to us and to our clients. So we're kind of here just to start your ESG journey. Make sure you're not left behind. Help you make the most of the opportunities it's going to bring. So yeah, here we are. Jose, why don't you tell me a little bit about yourself, your background, and a bit about Simplify Climate, please?
Of course. And as you say, I think I'll be here as well sharing my experience on this ESG journey I've encountered myself in the last 5 years. So I'll start with Simplify Climate. As the name suggests, is effectively bringing simplicity to the climate landscape of climate change effectively, but also trying to bring some sort of simplicity to the terminologies and the frameworks the accountants and your clients need to really consider. So I founded Simplify Climate. We're a marketplace of experts, and our mission is to effectively be the one-stop shop for all your needs. It's more or less, it feels like the environment at the moment in ESG, you have so many different providers, but no one can really link it through the accountancy. No one can link it through the reporting, and this is where we stand as a differentiator, where we provide you the expert advice, but also the accounting and reporting. How did I start my journey? I think that question a lot of people ask me, and I could go back 5 years, or I could go back 10 years, or I could go back 14 years, but I've audited the biggest copper mine in the world in Chile for 4 years. So I'm a Chilean national. I moved to Darlington, which is near Newcastle, up north in England. So I'm the second Chilean Geordie to exist, I think, in the landscape.
I think people in Darlington would prefer you not to call them Geordies.
But I'm a Geordie because I'm a Newcastle fan, so
Okay.
I call myself Geordie, probably. But no, I've had that discussion before. But so I moved from Chile, a country that's very mining, that uses a lot of water in various spaces. We are having significant droughts in the country. So sustainability passion was built in me, probably from being in that region, and moving to the UK really showed me that my experience of moving to the UK, doing my uni degree, doing my university, it feels that we jump into this world of sustainability, but we're not really taught of those fundamentals of how is the weather red, what is social, what is environment, what is
As
pollution.
accountants, definitely not. No.
Right. So I think for me, it's like when people are going to go to the gym and going to work out and all of that is, well, you first need to learn what are calories, what exercises do this for that. So that's how I started my journey. I started by thinking, okay, what's the mechanism of self-educating myself in terms of climate change? What's the weather? What's extreme? What's a drought? And just really bringing that back to basics to then read a framework and go, I understand it.
Yep.
And I think that's what, in my view, and why I'm on a mission is effectively to kill off that landscape, to kind of help people self-educate themselves on this complex landscape that people call sustainability.
No, Jose, you've talked to me in the past as well, and today about your kind of motivations and where it comes from, and I've had probably less an intense journey to you, but I've spent time in Bolivia, which is your next door neighbours, and I've seen the effects of climate change on population movement, and I've worked with some NGOs there as well. So it's a pretty tough. It's a really important issue for us all.
And I think, sorry, Ross,
go ahead, please.
No, it's a good point you raised there, because also there was a report issued by ACCA and also in the past where you look at the views of the Northern Hemisphere or the Western Europe versus other areas in the world, and when you talk about extreme weather and climate adaptation, the views are completely different because they're not seeing it directly physical. They're not seeing it when you ask an accountant in India, what do you think about climate change? The views are completely different to an accountant in the UK. So it's important that if you have people in your organization who have experience traveling and having that different culture, they should be empowered to really try and bring this behavioral change in organizations to integrate sustainability, because it's a behavioral change as well, and mindset to really empower yourself.
Yeah, I found that quite difficult.
Yeah.
I found it difficult personally to justify in the past how I've travelled, and to see these things, and then there's a contradiction in what's going on. I'm going to slightly move it away. We always talk about the climate and the environment, but just very briefly, I'd like to talk about the social, the S in ESG, and how is that relevant? How do you find that relevant in the entire context? Is that what do you think about that?
For me, the S is something that it's my personal view is a checklist exercise. I think we have all these regulations, and the problem we got is that, let me give you an example, health and safety. The regulation that you put into organizations, and you have a health and safety regulation, how much heating you have to put in the office. So all of that science behind that heating mechanism of the office is all based on men. So there's not been studies done on women at the workplace, what the impact of 24 degrees. That's why you got so many complaints at work.
I think that's, I'd say the S is not a checklist. I think the S is important.
I'm saying organizations are using it. The approach currently, where I see when I review reports, it feels like it's a checklist. Have we got this person on the board? Have we got this here, like that? Rather than really revamping that and saying, how can I unlock productivity gains in my workforce? That's how I see an S strategy.
So taking it back to the first principles, the social is part of that, is looking at the diversity of people who are in your organization in various terms. Then
I think it's stepping back. It's actually assessing your employees, not just from gender. It's also now from neurodivergent conditions. You got the increase in ADHD at the workplace is significant. You got the female gender. You also got the LGBT. We're in the Pride Month, for example. So it's really kind of, rather than going to do a reporting on the S's, we need to do an employee sentiment and evaluate where do we potentially have social conditions that require the support needed to then really make your staff productive, to then determine the related targets that you want to achieve in the board, etc. So for me, it's like the E. If as well, you look at TCFD and people are like, look at the FTSE.
Tell me what TCFD is.
Oh, sorry, yeah. I'm so assuming the language, but
we talked a little bit at the start. There are a lot of acronyms. We're going to move on to a few of these acronyms later on. TCFD is the Task Force
of Climate Disclosure. So people, because it has a D at the end, they think it's a disclosure checklist. So people, and that's why, and it's actually a risk framework that tells you these are the complete list of climate-related risks that could affect the business model. And then that's the framework I've been looking at for a period of 4 to 5 years, and it's a very complex framework. It's not easy because it's derived from scientific information. So, but that's TCFD. So when I say related to the social aspect, is that companies have gone in to do a net zero target, but they haven't yet measured scope 3. So
Stop.
Again.
So scope 3 is the widest version of greenhouse gases. So Jose, a huge part of the social as well is about sort of mental health and that. How does that fit in, do you think, with the kind of wider context again?
I think it's in my view, I think it's mental health again is derived from scientific information, from well-being, from cognitive, from what affects employees' mindset. So is that really understood clearly in an organization when we have so many neurodivergent conditions? So if I give you an example, for example, if I link mental health with the increase in dementia. So since the 1950s, we've seen an increase in dementia of 250% as of today. So that is clearly showing that as a society, our mental stability needs improvement in the sense of, so my view in terms of mental health for the social strategy is companies really need to understand these terms. What does mental health mean? What does mental mean? What is that? Neurodivergent conditions? Is that depression? Is that anxiety? And build a framework around that, because then then you're able to then implement a transparent social strategy. But that's
so
how
you're
we
looking. So there's obviously been a huge increase in the sort of awareness of mental health and anxiety, depression, especially with COVID, for example.
Yeah.
But you're looking at building frameworks around it and metrics, I guess.
Yes.
That's what you're looking at. Okay.
And I think, sorry, just to interject on that point when you're saying there's been a lot of research done on mental health and, as of today, but if I stand today and tell you that we've got the most diabetes ever in the world as a society, the most dementia, the most Parkinson, the most hospitalizations in the NHS, the most sick leave we've had in the FTSE and organizations. So if I step back and think, is mental health well understood? Could it be improved? Yes. Yeah. And I think that's what companies, by building a framework, can really help them improve the strategy.
Okay, that was a little bit of a departure, but we'll move back onto the more of the E and the environment, and I guess how we measure things and how as accountants, why should accountants really care about the ESG and the various frameworks, especially us who are involved more with the SME community rather than the larger companies?
And it's a funny one because we move from the S and the E, but I see them always interconnected.
They are interconnected. You're right.
Yeah.
I wanted to bring it up first, because we always overlook the kind of social. So I thought we'll bring that front and center, and then it's obviously a lot easier to think about the environment and then the governance that links everything together. But you're right.
No, I fully agree. And so the E, when I explain to people about the E, is the non-financial indicators that are impacting an organization's business model. So one of them that I'm extremely passionate about and I've been raising awareness for now I consider a significant amount of time is changes in weather. Yeah, we are seeing the UK's weather is rapidly changing. 2023 was the hottest on record. 2024, you probably see it's getting hot, but it's not about just getting hot. Is we're experiencing more droughts in the UK. We're experiencing harder precipitation, rainfalls, and that affects the seasonality. So summers are getting longer, winters are getting shorter, and that will affect food security, which one of the key sectors in the UK is agriculture.
And I'm gonna just stop you there. I think the basis and the evidence base for climate change is pretty well established. I know there's some people who would say they have skepticism, but that's generally, I think it's pretty mainstream. Related just to our sector, to as accountants, to someone who's maybe in a medium-sized firm in this country, how does it affect them, the ESG, the agenda, and the various new disclosures that are about to come on stream? Yeah.
I think if you're an accountant, as I was mentioning, of these changes in weather, is weather doesn't care what size of company you're in or what regulation you're captured by. Weather is going to come rapid, it's going to keep changing, and will affect your business model decisions. Imagine your suppliers, right? If they're from the southern hemisphere, India. So if you're in a small accountant and you have a supply chain that's quite not very diversified, and you are preparing the financial statements, and then you evaluate that there could potentially be a risk with this supplier that may require disclosure, then those are things that you need to start thinking about. But what also I think is important for the small account, the small SME kind of area, or if you're an accountant working for more of a, not the listed companies, as you say, more of a medium or small size, it's effectively understanding insurance premiums. That's an area that you can see that weather may affect that. So if that's an indication that might affect your accounting,
going concern,
right? So that could be a key metric. And one of the areas you can review to your audience is Peterborough. Peterborough is an area that's already underneath sea level, and we're seeing an increased flood,
for example.
And also Bristol, if you're in Bristol as well, and in the Midlands, for example, in the Midlands, the UK government is behind flood defences. So those are things that, again, I could go into a rabbit hole of extreme weather, but going back to the self-education piece is, what is weather and how is weather affecting my business?
But so there's going to be a number of disclosures that we'll have to take into account as accountants. So there are a lot, and we talked about this a bit earlier, there are acronyms left, right, and centre. We've got IFRS S1 and S2. Yeah. We have ESA 5000. We have the ESRS and CSRB. Are you okay to talk me through what all of those mean? Very briefly.
Let's start with IFRS S1 and S2. So I'll probably say that. I mean,
I can help you out.
Before jumping on this. No,
yeah, okay, go ahead.
The other statistic I mean, I would love to see the percentage increase in acronyms for accountants in the last 10 years.
I think you told me it's 155,000.
No, that's regulations. So there's 155% increase in regulations that we accountants need to navigate. Yep. And that's I haven't been in a world like that before. But going back to your question on IFRS S1 and S2, so the IFRS created the foundation ISSB, which is the International Sustainable Standards Board. So that board is taking the oversight of TCFD, which is the acronym Task Force for Climate Financial Disclosures.
That task force was set up, about 7-8 years ago?
2017 by Michael Bloomberg and Mark Carney.
And they roughly came up with a framework that entities should really use when they're looking at governance, the risks and opportunities from climate change as well.
That's correct. I think for me it's like the Bible of accountancy risk for climate risk. Like they list down, I mean, I might get this wrong, but 15 risk or 14 risk in total. So there is no more, no less. It says what type of risk, what's the potential financial statement impact. So as an accountant and auditor, you can clearly categorize which area of my accounts might be affected. But the problem you will have is the initial risk. That's where the self-education piece needs to happen.
But the task force, they then informed the IFRS S1 and S2, and these are standards that relate internationally to those entities that are looking at non-financial, sustainable information. That's right. Yeah.
That's correct. Yeah, because when TCFD, then you got other acronyms as well, but you had all this sphere of acronyms, and then the ISSB is trying to standardize all of them. Yeah. So the ISBB, the International Sustainable Standards Board, has signed an operating agreement with the Global Reporting Initiative, has signed an operating agreement with the Sustainable Development Goals. So you have this kind of standardization happening that is going to be led by the ISBB. So that's going to be like the ultimate. So
again, we'll try and move away from these acronyms because they are getting complicated. The GRI is another organisation that was looking at the standards, but that's now been joined up. There's a kind of letter of engagement or agreement. We have the UN Development Goals, which are a bit more sort of, those relate to various aspects of living on the
societal
earth. Really.
Impact.
Also, living on land, living in the sea, for example. But anyway, S1 and S2 then, these are these overarching standards, and they're slowly but surely being integrated into the regulations for each country, I guess. China basically brought them in recently.
Europe, the G7 approved the endorsement. So I think when people ask me so the question I get all the time is which one is the top framework to look at out of all the acronyms? I'll say ISSB, because ISSB has taken, so the TCFD information has been transferred to them. They've created, that's what IFRS S2 is. So IFRS S2 is the climate disclosures. So that's basically, if you compare TCFD with IFRS S2, is fairly similar. And then IFRS S1 is effectively the general requirements on all aspects. So
that's right.
And the next standard they're working on is another acronym, but it's biodiversity for TNFD. Yeah. So what I'm saying is that's going to be the norm now. There could be a pollution standard, and then IFRS S1, we could have IFRS S20, for example.
Okay, let's really bring this back to first principles. So the IFRS S1 and S2. Yeah. S1 looks at the general risks and opportunities that arrive from climate change, for example, or just general
sustainability matters. Yeah.
And S2 is more looking specifically at the greenhouse gases,
climate risk.
Yeah. So these will be integrated into financial reporting as non-financial reporting into obligatory standards that companies will follow in good time.
Well, subject to the election's outcome, but
in the UK, for example.
Yes. So, for example, this already listed companies can voluntarily report on it from the 1st of January 2024. Yep. So we will see the first reportings at the end of this year. From next year, I cannot say for certain, subject to the elections, but the Labour Party, who are favourite based on the polls, have confirmed that they will continue with the mandate of climate disclosures. Yep. But at the moment, I'm confused too, in the sense of, because the government's regulation in the UK, for example, says that you need to integrate climate disclosures using the TCFD framework if you look at the listing rule. Yep. So then now with the IFRS S2 notification and endorsement by the government, should the listing rule be updated to then reflect that ISSB is the new norm of reporting for climate risk? So I think there's still a bit more a few more months to understand how will that evolve.
And once the IFRS S1, S2 comes into force in the UK, that will be mostly larger companies.
Yeah.
But it will filter down eventually, in your opinion.
It's just the indirect impact. These listed companies will request information to their suppliers. So I've seen, in my experience, in my Big Four experience, when I was reviewing TCFD reports and information, is they send questionnaires to suppliers asking information that this supplier has never looked at ESG, has never looked at climate change, and you ask them to complete all. So then companies are some of them are good at training the suppliers, and then they go either you complete the form or we get another supplier.
And this is an opportunity now, I think, for, I would say, some of our clients with Mercia and some of the accountancy firms, the audit firms, to, as practitioners who are used to reporting and providing assurance. So tell me a bit about ISA 5000 then.
ISA 5000 is the assurance standard that is being developed to move away from my understanding from incorporate also reasonable assurance in terms of purposes of the assurance view, which in my view is a change from limited to reasonable. Is you need to test a few more controls.
It allows the ISA 5000 allows limited and reasonable assurance, so you can do both.
So effectively, but for me, going back to your point of your clients, the new opportunities is the only way your clients are able to potentially find the new opportunities is what are the risks on my clients.
Yep.
So if I was a partner in one of your accountancy firms, the first thing I would do, for example, is go through my client list and evaluate which of my clients are affected by ESG regulation. They need to be considered with a higher risk rating in terms of my work delivery. And then the second point is what's my opinion risk or my accountancy risk? So do they have any long-term assets, for example, that may affect the accounting may affect it that require disclosure. So from that process, you will find 5 clients or 6 clients where you need to go and potentially negotiate an incremental scope of work to understand ESG. So that's a clear opportunity if you're somewhere in the UK that you can help your clients with.
And ISA 5000 provides a framework there, so it can provide how you do the assurance, the ethical standards, and various frameworks. I mean, I'm working on a methodology myself to integrate that, and so somebody can come along with a kind of toolkit and in the same way that we do that with ISAs. So I think it's something that's quite familiar for accountants, and a lot of the language in ISA 5000 you would totally understand. You can see that in the ISAs. It's quite derivative of that.
Yeah, so I agree. I think it's quite an accountancy word in type.
There is
of
a little bit of that.
Yeah,
I felt like I wasn't learning a new language when I read ISA 5000. Yeah,
it makes you feel comfortable a bit.
I would say so.
I can finally read something that I can understand the language.
That's still in its exposure draft, I think, or it's now the time for consultation is finished, but it's kind of getting there. It's getting pretty close.
And it's also, I think, it's not just assurance for us what they got opportunities on. It's also
as well
your audits. The clients that you're reviewing. You need to negotiate potentially not over. That's the wrong word, but like incremental fees for the incremental regulation they need to do.
That's right.
And also just to ask those questions, I think, to your clients. Because my experience has shown that they could get a letter from anyone, their bank, their insurance, their customer, their supplier saying, you need to do this, and if not, we may not carry on with the relationship with you. And getting that letter without the self-education, it might be impossible for you to navigate.
There's extra work on going concern, for example. Right. There's the supply chain, the anything like that. It's all up for grabs at the moment. And what I've tried to say to people as well is that it's something to be ready for. It's potentially a risk, but we're accountants. We do better. We're the guys who can drive a change. We're the guys the people who we can take an opportunity as well. This is an opportunity for us. This is our product. ISA 5000, IFRS, S1, S2. These are products that that it's an opportunity for us. I wouldn't say, I wouldn't be afraid of it. Agreed. I wouldn't complain. I've seen this happen before where people they say, oh no, there's another regulation, and people complain. They say there's too much, and I say, well, actually, we should stand by this, and there's a general good coming out of it.
Yeah.
There's also, if you look at complete self-interest, this is good. I mean, when things change, it helps people who are advisors, and that sounds entirely cynical, but I think we're okay. We're well positioned as accountants to deal with this well and to help our clients. So.
Definitely, and I think sharing my experience managing group audits, my Big Four experience, managing all this, doing audit all the time, and getting involved in ESG is something that at least as an accountant will give you meaning to help organizations find that value in the sense of because if you step back and look at we talked about social before, for example.
Yeah, I was thinking the exact same linkage.
And if there was an ICAW report issued last year that 1 in 4 young accountants has got alcohol problems. 1 in 8 has got some sort of gambling problems. And so what I'm saying is getting involved in the ESG landscape or supporting that direction of travel can probably improve that social aspect as well in the accountants.
I think there's a challenge, I think, for getting new accountants into the sector, and at the moment there's a huge challenge there. And I think if you look at the social, people, they're not just always interested about the financial. People are interested about socially, about bringing some good. And I think this policy, the focus on sustainability is something that can bring a lot of interest to our sector as well. So I don't think that's anything bad at all. So
and I think also the key value of our sector is it's quality.
Yeah.
So if you're giving an advice to a client that might be affected by a flood next year, then your quality it's probably not there yet in the sense of your quality may be affected in the documentation you do, in everything you do. So I think if us accountants and auditors value quality, value transparency, then the meaning and integration of ESG as an accountant is important. And if you step back and if I summarize briefly for your accountancy audience, for example, when I look at our financial statements, the 4 key things that are easy to find that may drive that discussion and may encounter where the added value the accountant can provide to its client is credit risk. That's an area that you can quickly ask a few questions and ask the client, by the way, any of your customers affected by any of the changes in weather, any of your what's it called, also not credit risk related, but supplier for business disruption. Then you look at PP&E. That's where I find all the noise. That's where I have fun. Property, plant and equipment, where useful economic like 50 years and you go on net zero target of 2030. Well, that's an anomaly that you need to evaluate and investigate. Definitely. And then if you look at, like you say, going concern impairment, those are long-term terminal value assumptions. How are you challenging managing on the 2% growth rate if it's committed to a net zero target? So I think
absolutely
it's that aspect of getting that big picture integration into you as well of a sector will have 2 or 3 things, and that's the thing that is important for you to integrate. You're not going to be able to do it all.
Yep.
And it's that mindset that you need to.
Yeah, there's as well as these really specific things we're talking about standards. There is this just overall picture that you have to be aware of. You stand back, like we do with all sorts of things. You stand back, you think, well, what's going on?
Yeah. And it's like AccountX. I was on AccountX in May. The event in May, I was presenting there on a.
It's like an industry business.
All accountants. Imagine it's an accountant Excel.
A warehouse.
Warehouse of accountants. There was a number of interesting stands, but I'll be honest. I mean, I was surprised with the knowledge on ESG. I mean, So the IFRS issued education materials on the effect of climate-related matters on IFRS accounting standards in 2020. Okay, so that's 4 years ago. So when I went to the event, I was surprised that people were, what is ESG? What is, and that clearly made me realize that we need to empower. We need to do a better job to this kind of audience that effectively stop looking at this area politically, stop looking at it, step back and go, like you say, step back and go.
It's a competitive advantage.
Yes, it's a competitive advantage. Your employees will be happier, your suppliers will be happy reporting to you, your customers are going to really like you because you're supporting their commitments. Yep. You might get a reduction in your insurance and bank compared with your competitors. For me, it's a no-brainer.
You're looking a little bit more strategically and a bit more in the future. Yes. You're looking at the risks, the opportunities that are out there, and I think it's a really good message to take, and it's a good way to talk to your clients about it, even if they aren't 100% affected. It's good to know that you are, you are.
Agreed.
Right. I really just wanted to bring in just one small comment, and I'm taking you back from the general a bit more to the specifics. We have clients who work in the Republic of Ireland, and they're a little bit more affected by the standards that are coming out at the moment. There's a European standards. These will affect people in the UK as well, because of the way they might have companies that they deal with there. But could you tell me a bit about how the Republic's affected specifically at the moment with the European standards?
Yeah, so I think if you're a UK subsidiary, for example, covering in the UK effectively, just to before jumping onto the island quickly, if you go, I believe the threshold is 40 million revenue turnover. So if you're a subsidiary of a EU parent, you may need to report on these new approved standards by the EU.
That's going to be coming in various steps, isn't it? Depending on how regulated the industry is and the sizes, I think. But over the next sort of 3 or 4 years, that's going to become quite mainstream. Yeah, it's going
to be phased similar to what the government has done here for climate disclosures, phased in terms of size and etc.
Yeah, exactly.
But yeah, it's called so it used to be called the Non-Financial Reporting Directive, and now it's moved to the Corporate Sustainability Reporting Directive.
And that's EC regulations or directive, sorry. I always mix the two up.
It's called CSRD. That's the
directive.
Another acronym. But it's a directive, yes. Yeah. And then that releases ESRS, which is a list of 18 type of standards. Yeah. And it's similar to ISSB S2, where you got climate change, you got the various ESG matters. So because the EU is driven by themes, so themes of sustainability, and they built a EU taxonomy.
Yeah, a taxonomy is kind of it's a number of criteria that you measure based on industries and things like that, isn't it?
It's to basically how you classify what's sustainable, and the definition and the arguments they've been having is how is nuclear fit into that taxonomy, etc. But if you step back and you're in Ireland, you've got the EU taxonomy, which is going to help you to classify things and effectively from a allocation of what's sustainable or not in the economy can help with that. Then you've got the standards of the EU, the CSRD, which effectively splits out its specific standards for each type of material topic that affects your organization in the EU. And then it depends on what size you're in for the phasing approach.
Yeah, the phasing, I think that's something that's interesting, because I think we might have people who be listening in Ireland who want to know, what is this something I have to deal with today or yesterday? Have I missed the boat, or is it something, if it's a smaller entity, I can deal with in a few years' time?
Yeah, so I think sorry for my negative comment, but I think that weather is not waiting for how regulation is going to affect you. It's not going to wait for you. So
Jose, I think you wake up every morning and you think about this. There's a small. You wouldn't believe this. There are people who don't think about this every single day the same way that you are at the absolute avant-garde of this. And I think there are people who might be a little bit. They might just be driven a bit more by
the regulation.
Yeah, let's just think about this from their point of view as well.
So I think but what I'm saying is, one of the areas of the regulation that before I jump on the phasing now is it requires you to do a climate transition plan.
Yeah.
So what I'm saying is, and also it requires you to assess the weather risk. So if you wanted to ensure that you're managing your budgets and you're managing your reporting costs adequately, maybe better to do an incremental approach and start by understanding these themes that the EU is approving as a self-education, to then look at the various ESRS and the reporting wording on that. But from a phasing out
perspective... Yeah, humour me, Jose. Tell me about the phasing.
Well, the phasing out, my understanding is, if you have more than... It's all driven by revenue and employee perspective, size. So I think my understanding is 500 employees need to report first. Above 500, then it's 250. And the reporting, my understanding, is started from this year.
For the largest firms.
For the largest. And then next year they phase out for the... But the thing that I think your audience need to be careful on, we also got the EU elections that happen. We also got the French elections, and there is a big pushback to delay the implementation of this regulation. And also the agricultural sector is not covered by this regulation.
Yeah, that's true.
So, and which is the
pretty significant, I guess.
They use 70% of our water resources in the world. So that sector, but effectively, it's again is you can spend ages looking at the threshold, what's going on with the regulation, but the key things that you need to consider is your water risk, your extreme weather risk, and your social risk, and those things you can start budgeting them now. So then whenever you get, the EU affects you in 2 years' time, then we need to do everything in one go.
Right. I think we're kind of pretty close to understanding that.
Yeah.
There's been a lot of I wrote a blog on that, so if you want to have a look at the blog, we can. No, I'm not saying you. I think you probably.
I
know
will
this.
have a look at it.
But there is a bit about the phasing.
Yeah.
But yeah, it is over a sort of 5 or 6 year period as that becomes more obligatory, and the things could change slightly based on the European legislative context as well.
And I think the sector standards could also like push back because they're going to have the general, again similar to FRS 1 general requirements, and then they're going to do sector standards because to standardize. Because what's happened as well is that you got the companies in the UK that are in the same sector should technically have the similar strategy from a climate change perspective. But what you have in here is that in the UK you got the transition task force, which is creating standardized plans for sectors.
Yep.
So then it'll be easier for companies to report on climate transition plans. It's the same stuff in the EU that they were going to do sector standards for banking, insurance, but those have been pushed for later on. No,
that's right as well. There's been a bit of slippage in the UK. The international standards are moving on quite quickly. And the ESA 5000, which is the assurance, that's happening. We're hoping to get something there maybe in the end of this year, I think.
Yeah, it needs to move rapid, because you've got so many commitments out there that need that reasonable assurance.
No, definitely. I'm gonna stop talking now about the standards. I think we've overwhelmed people with quite a lot. We'll probably try and put something out, a little bit of a fact sheet. I think we probably have done. It just needs. There is a lot.
I think it'd be good for your audience, an acronym, the description,
glossary,
the link.
Would be great,
glossary we can share after, and
they
can get familiar. The cheat sheet of I don't like calling it cheat sheets with this ESG area, but you can call it your acronym cheat.
I think we're getting pretty close to exhaustively covering what we're hoping to do today. But have you got let's say 3 key things that if you say to me, Ross, I've got my firm and I'm trying to help the clients. What are 3 things that I should be doing in the next few months just to make a start to my journey?
For your clients, I mean, we accountants are historians.
Yes,
we love reading a company's story. Giving a company story, reading the financial statements.
We're a bit backward looking sometimes.
Yeah, it's backward because the standards are historical.
But we can help looking forward, surely.
Correct. Going concern, impairment, those are things that can help you look at the future perspective of the world. So for me, it's keep that historian view, but self-educate with these key terms. Start understanding what E means, what S means, what G means. And then what is the ICAW has a great framework of the E, the S, and the G, and what the components that are affected. So
they do, it's good.
Get familiar with those, and then also just it's not just you. I think then my second point, the self-education, share it with your team.
Yep.
Make that cultural, behavioural change in you internally. Going, let's set up an ESG steering committee. Let's get these people who are passionate about making the company better, serving your clients better.
Yeah, I think if. I'm not suggesting that everyone would set up an ESG department, but the even having a little bit of focus on that, I find that really motivating, and I'm sure there are a lot of potential employees are really motivated by that particular aspect of finance as well. So
and on that point, as you say, they might not have the setting up monthly but quarterly, but going back to my last tip is see this as a competitive advantage.
Yep.
These groups can really create, I mean, me and my team, for example, now we're trying to build waste management strategies, the pollution strategies and what we're identifying is the awareness training required to teach the people that can empower that dynamic is quite significant. So see it as a competitive advantage because you're going to find cost savings and your employees will work better.
Yep.
Yeah.
Have you got anything else to add? Because I know you're an evangelist for the climate, for sustainability agenda.
What else not to add? I think for me, from a personal perspective,
I think the personal perspective would be really good to add. Tell me, what are we going to do? What are the little changes we're going to make?
So people ask me, what change have I done? So it's difficult to drive your own behavioural change to deal with reduction your own emissions, doing you better for the environment. When you go on the news and you see private jets being flown around all over the world, you see new oil and gas being approved, you see targets are being pushed back. So to drive that behavioural change is quite difficult. So on a personal level, unfortunately, my stepdad died of a heart attack of bad health. I've been on a mission from a health perspective myself the last 3 years, where I've been this crazy guy. I've been going to the gym twice a day and basically implemented fasting. But one of the areas I found where I could reduce my emissions was fasting. So that I'm basically reducing emissions from that, and then I'm cooking more food. I'm cooking more food at home, which uses less plastic, uses less transportation of products. I try and go to local farms, local butchers in London, etc. But yeah, it's just those incremental small steps that you can do that can, one, get you healthier, can be also helping the environment, and also getting you more productive. So that's from a personal story. What I'm on a mission myself to get more productive. And
I've just come back from a visit to the north of France where I cycled everywhere.
Yeah.
I need a holiday from my holiday. There were no flights, no cars, just me.
And then it's like, for example, with my company, we do this personal, but we do meditation at 2 p.m. If all my team, we sit down, put the speaker on, do meditation for 10 minutes, and just get the release of some of the stress, and then you're more productive. Because with my ADHD, I can be, a bit crazy when I work, but that would be my personal point to it.
Yeah. No, there's a lot of different messages there. I know if we've overwhelmed you, we have a little bit. But yeah, we'll try and put something out that's just maybe summarising what we've talked about. We've had a lot to go at, and thank you so much, Jose.
I think
sorry, go on.
I think the call to action is, I think with the topic of ESG, you'll find yourself that you're always going to be slightly overwhelmed with the acronyms, and you're trying to then break down the acronyms, the standards. But I think that the call to action is just look at your financial statements, look at your clients, and start reviewing those regulatory risks, how it affects them, and start looking at the assumptions and judgments. And from that, then you can build a picture that can help you. The personal aspect, that's your own decision in terms of, you and your family. But that would be that call to action of just stop looking at it politically. Just, it's a business risk. We need to start understanding it, and it's also a competitive advantage. And hopefully that creates your...
I can't disagree with you there. Thanks, Jose. I know I've put you a bit on the spot there a few times. I've tried to move you around a few bits, and we jumped around.
Always. I've always been put on the spot.
super interesting. And your story about the ESG, how you got into it, is quite inspiring as well. So I hope everyone who's listening or watching us even got a great insight into the trends in what's happening in sustainability. At Mercia, we're developing products and methodologies as these standards come into play. And we're here to provide support and listen to your ideas as well. So we're here to guide you there. So thanks for listening and watching as well. And hope to see you all soon. And thanks, Jose.
Thank you, Ross.
Bye-bye.